And what we're going to do today is two things. We're going to take a kind of a bigger picture view of the S&P 500 to get an idea of where we could be going in 2023. And also I'm going to talk about why I don't see the setup for a direct drop towards 3,200 right now. Anything is possible, but I'm going to give you my evidence for why I don't think that is, and also going to give you my backup plan in case I'm wrong. Hello, everyone. Knox Ridley here, portfolio manager with the IO Fund, and this is our weekly broad market update. So if we start off, the question is really, was 2021 or 2022 a major top or not? In other words, in this blue count, this is a fourth wave drop, and we have a fifth wave move to new highs in 2023, 2024. This is very much the contrarian perspective, and that is by no means a reason to lean into it. I would very much want evidence of that happening before we start leveraging into it. The other scenario is that we, on October 13th, dropped in the first leg of a three-leg bear market that would likely take us towards 31.55 in 2023. And in order for that to manifest, we need this structure right here to really give us a clear B wave move, a three-wave move. So far, we only have two waves. So we need that third wave push in order to justify that. And these are the two most likely interpretations of this structure that I see playing out right now. And so how this would manifest, and in both cases, is we need to make a push towards 4,300. This was your A wave. We were very aggressive buying down here, very aggressive in selling and putting on hedges here. And we started buying again. We started taking off our hedges down in here. And we're anticipating this C wave push up into early 2023. Now, there is a scenario where we break 37.65, and this B wave can make a double bottom, if not push a little bit lower. B waves are treacherous, they're variable. You got to be on your toes. And so this is our bailout spot. If we go below 37.65, we're going to go full hedge, and we're going to wait for the market to really sort it out. But the question is, well, why am I saying just a double bottom or slightly lower? Why am I not saying a complete breakdown? And what that scenario would look like is this right here. This was your A wave, short B wave. This was your 1, 2, and we're about to have a third wave drop that would take us towards really 2,800. This scenario has us going towards 2,800 in 2023. This is, to me, the lowest, the most shallow that this count would go. And so in order for us to be setting up for this third wave drop, in my experience, you need to see all markets, many markets coming together to give you the force to go down that low. And I'm just not seeing those markets setting up like that. For example, let's take a look at the Dow. The Dow Jones looks like we only have 4 waves off the COVID low, and we need that fifth wave push up towards 37,000, 40,000 in order to complete, put in a major top. And so I look at the Dow, look at various value names we've talked about for months on this channel, and they don't look to be setting up for that third wave drop. And just to show you the relative strength of the Dow, for example, this drop right here has only tested the 38% retrace of this move off the October lows. And you look at the S&P 500, it's below the 50%, and the NASDAQ 100 looks like it's going to try to make a double bottom. And so you're seeing strength in the markets. There's a move towards value that's very noticeable. There is noticeable strength in the Dow, and I'm just not seeing that third wave drop. Also, the Dow is about 15% from making new lows. The S&P 500 is about 8%, and the NASDAQ 100 is about 2%. So once again, you can see a scenario where the Dow drops, to levels around in here, maybe even down in here, while the S&P 500 makes a double bottom. The NASDAQ 100 continues to make a new low, right? And you'll see that continuation of these divergences we've been talking about. Now, I will say this, if the Dow breaks its low, this October, late September low, then we're setting up for a major drop. So that's going to be your line in the sand right there. But I look at the Dow, and it just doesn't look complete in its bull market off the COVID low. The same can be said about the Canadian TSX. I track this market very closely because it tends to be correlated with the S&P 500. It tends to lead the S&P 500. Looks a lot like the Dow, just 4 waves off of the COVID low. And this to me looks like an overlapping, messy fourth wave, very typical, complex, overlapping, messy, deep fourth wave on a pretty large degree. And it looks like it's setting up for that 5th wave push. And if we take a look at this move off the October low, 5 waves up, 3 waves down, holding the 50% retrace, getting a clear buy signal. The composite index is making a lower low while price is making a higher low. So to me, this looks like it's setting up for some kind of a low and a breakout move into early 2023. And so why this matters, when you look at the Dow, you look at the Canadian TSX, there's a lot of markets in Europe as well as the Australian XJO. They don't look like they're setting up for that 3rd wave drop. And so typically for those big 3rd waves, you need to see all these markets setting up for it. I'm just not seeing that right now. So our plan is below 3765, we go full hedge. We're going to let the market sort it out. We'll wait for a new buy signal, and then we will leverage into that buy signal. So I hope that was helpful. We actually do a weekly broad market update. You can sign up for our YouTube channel below. We also put out free and paid institutional level analysis on the tech sector and various crypto coins that we believe are innovative technologies. We do fundamental and technical analysis, very high level analysis on these specific stocks, and manage an active portfolio live, where you can sign up at the iofund.com. And once again, we hope that was helpful and that you have a happy new year. Thanks a lot.